Welcome back to our live video cryptocurrency trading series. And today we're talking about a perfect storm of negative news last week and crypto markets just barely stabilizing in the wake of that perfect storm of negative news. Looking at the what happened last week, if you look at the markets overall, you've got Bitcoin trading just a week ago at 11,500, dropped midweek to as low as 8,300. So that's a pretty big drop from 11,500 to 8,300. That's the purple line here in the diagram, and you can see that the crypto markets pretty much, these are all the major players, the large cap cryptocurrencies, and they all pretty much followed Bitcoin. Ethereum taking a big hit as well. It was trading a week ago at 865, and it dropped as low as on March 8th. It dropped as low as 650. So 650 now, Ethereum having recovered somewhat to near 700 currently, but dropping from 865 to 650. That's a pretty dramatic drop. So a lot of negative news. Crypto markets today recovering, not dramatically, but at least stabilized. And you can see that on the 7-day column here, uh, everyone's in the red pretty much. All the big large cap coins: Bitcoin, Ethereum, Ripple, Bitcoin Cash, Litecoin, Neo, Cardano, Stellar, all in the red, 7-day return and 24-hour return. So what's going on with all this negative news? Well, some of it really isn't horrible news, and a lot of it's not really new news. But it just kind of all came at once in sort of a tsunami of negativity. So, with a perfect storm like that, you're going to see some serious carnage in the crypto markets, some devastation, and that's what we saw last week. The Mt. Gox hack continues to haunt cryptocurrency. Now the trustee is selling off the Bitcoin, and it's a lot of Bitcoin. So this was one of the headlines that Bitcoin drops to 8,300 as Mt. Gox trustee sell-off continues. And really, it's hard to say which of these pieces of news was really had the most impact on the cryptocurrency markets. But if you look at, more than $1.7 billion worth of Bitcoins is expected to be sold in the next few months. So, people who are, holders of Bitcoin, hodlers of Bitcoin cannot be happy about that. The Mt. Gox hack continuing to haunt us. Now, there was another hack, Binance, and this is a completely different kind of hack. So, Japan has been the focus, has been the sort of the epicenter of the world for cryptocurrency hacks. And these are exchange hacks, and the Mt. Gox hack and the CoinCheck hack more recently have in common that the thieves went after private keys that were stored by the exchange on behalf of their owners. And so Japan has been cracking down on exchanges and trying to shore up their regulatory scheme in order to protect consumers better. And so that's a good thing, okay? But Japan has, kind of become famous as the world's epicenter of exchange hacks. Now, these exchange hacks, again, had to do with private keys that were stored on the exchange on behalf of the owners of the cryptocurrency. Now, this new hack on the Binance exchange was something completely different. Okay, this was blamed on trading bots that stole API keys from account holders so that it could access and trade their accounts. Now, once you have the API key of someone's account, you can't withdraw funds from their account, but you can execute trades on their behalf. So this was very clever. They actually got people who by just routing them to a false website to log on, they got into their accounts and were able to create or steal the API keys that would allow the bots to trade on the exchange. And then in one fell swoop, the bots went in and sold a whole bunch of different coins, exchanged them for Bitcoin, and then bought up Viacoin and drove the price up in a huge pump and a huge pump and dump scam. So basically, what happened was the API keys allowed the bots to get into the exchange and trade altcoins on behalf of the customers, and they were able to pump up Viacoin. And what was it really was a big pump. Viacoin went from $3 to $200, and it was but remember, this is not an exchange hack. This is something different. This is actually the bots were able to compromise the APIs of the customers. So, and like I said, in some cases it was a phishing attack that tricked customers into giving up their APIs or giving up access to their exchange accounts that would allow the bot to obtain their API or set up an API on their behalf. So, you got to be careful on exchanges for several reasons, not just because you're not in control of the private cryptocurrency, but also now, obviously, because the API keys that can trade your altcoins on your behalf on the exchange, even if they can't withdraw your funds, they can do a lot on the exchange to wreak havoc. So it's important to be aware of any kind of suspicious websites that you get routed to. Always look at the URL. It seems like one of the common themes here that we're seeing in the phishing attacks is that they use these URLs that are really, really close to the URL of the actual site, with the exception of a forward slash single character or a misspelling or something like that. So be aware of your URLs whenever you're logging onto your exchanges, and I would just recommend using two-factor authentication all the time so that you know that you've logged on to the right place. But this was not an actual exchange hack. It didn't break through the security of an exchange. It broke the security vulnerability that it compromised was the API keys of the customer's accounts who held altcoins on that exchange, and then it was able to pump up the price of an altcoin on the exchange. And the good news is that it had a happy ending, because all the sinister trades, all the unlawful trades were reversed, and the thieves actually lost coins. They actually lost money. So in the end, crime didn't pay. In the midst of all this, the SEC was at it again, publishing a warning against unlawful crypto exchanges. Now, the SEC chairman, Jay Clayton, had said last month at the Banking Committee hearing in the Senate that the SEC was focused on compliance, basically with regard to the security, the classification of tokens as securities, and it seemed like one of the focuses of the subpoenas they issued, when they issued a whole raft of subpoenas, was regarding the simple agreement for future tokens. So, which is was a way to circumvent the selling of a security in an ICO. So that was pretty much what they had said before, and so I think people felt reassured by that when they came out with this other warning against unlawful exchanges amidst all this other news, the hack, the bug, the Japanese crackdown on cryptocurrency exchanges, all that. Uh, People seem to panic once again, but really all they were doing were telling investors that in order to be sure that there's SEC oversight, they should only use entities for trading that are registered with the SEC. And that's so that really wasn't, that was probably overblown just because it came in the midst of all this other market panic. The Japanese crackdown on exchanges and the Binance bug that allowed the bots to trade via from $3 to $200 in a matter of minutes, and the Mt. Gox sell-off that continues to this day. That hack was, if you recall, that in that hack, unlike the CoinCheck hack, in the CoinCheck hack, the thieves stole private keys, and they were able to just kaboom in one single transaction remove all the coins from the exchange, in a single transaction. Whereas in the Mt. Gox hack, the thieves stole the private keys, and then over time, any funds, any coins that came into those accounts, they just gradually transferred them out. So went on for a long time, and now the settling that or cleaning up that issue was it is continues to this day, and the Mt. Gox trustee is selling off those Bitcoin, and there's a lot of them to sell. So people are saying, well, it would be more equitable to sell those on an over-the-counter transaction as opposed to dumping them on an exchange, which will cause the which can cause the price to tank. But looking back at the CoinCheck hack, which was also, it's also a Japanese exchange, so it was, and that was the largest heist in history. Okay, it was about half $500 million. Okay, $530 million worth of cryptocurrency, and that's really that's the biggest one ever. Mt. Gox was also pretty big, but what happened in that case was all the NEM coin, the entire stash of NEM coin held by the exchange in a single transaction was removed from the exchange. So CoinCheck just got wrecked. They just got wrecked, and as a result of that, it's a good thing that Japan is cracking down on exchanges, because the exchanges should be responsible for, if they're storing your private keys, the exchanges should be responsible for making sure that those keys are safe. But really, in this case, it was bots stealing API keys, which allowed them access to the exchange. So they had legitimate access to the exchange. They didn't hack into the exchange. They were able to actually, they got in through a vulnerability on the customer side. So the lesson here is, don't store all your coins on an exchange, because you don't have control over the security of the private keys. But also, whenever you log on to an exchange, make sure you're on the right site. Just read that URL. Make it a habit to look at the URL, and also use two-factor authentication whenever you do anything. And I would be wary of handing over your trading decisions to trading bots just because of this issue. So, negative news in the crypto space, cryptocurrency markets, recovering. I don't know if recovering is the word, but I would say stabilizing is the word. And Bitcoin is back trading above 9,000, went as low as 8,300, and Ethereum, which had gone as low as in the dip with all that negative news, went as low as 650, is trading back at about 700. So hopefully this video has given you some useful information that you can put to work to make better, more informed, more research-based cryptocurrency investment decisions. Ciao for now.